Now, and this is how simple I try to keep this, folks. Bitcoin is the biggest performer of 230 something percent. And this trend just continues. The money printing has run amok at the Federal Reserve and elsewhere. Bitcoin is widely being perceived as a store of value that is going to be around for the next 12 years, certainly the last 12. And I see the acceptance and the trend continuing with higher prices almost inevitable. Uranium, after Fukushima, 10 years ago now, the 10-year anniversary just came and went. The oversupply has been worked off. Nuclear has been growing, which most people, can't fathom. And it fits into the ESG theme. So uranium prices have just picked up to above $30, the spot price, and you're going to see utilities lock in higher prices and miners demand higher prices as far as the eye can see. And I just think the theme is terrific. Cannabis, I like more and more with every passing day. The stigma is leaving or is gone, and states need revenues, and it's a relatively painless way to tack on 20% to all the cannabis purchases, and in the case of Massachusetts, I think that's what it is, and bring it to the Treasury. So I see this trend going a long, long way. More on that later. Blockchain, the NFT explosion, the Bitcoin explosion. In our ETF, there's stocks like MicroStrategy and Square, and I just think that they're not cheap, but I think that it's a trend that we're going to be exploiting for a long time. Esports and gaming, I think, are in its infancy, especially esports. It is becoming more and more prevalent, gaining more corporate sponsors, getting celebrities involved, and I'm very excited about that. Copper, Dr. Copper is the best economist I've ever seen. It's hitting new highs. Demand from China is monstrous. Demand for EVs is monstrous, and it's clearly going very, very well. Given my Bitcoin comments and my bearish on politician comments, I'm short bonds. The infrastructure bill is another example of how the government can squander money. Yeah, okay, there's some good things in it, but $1 trillion here, $1 trillion there, it adds up to real money. And bonds are telling us that it doesn't care. They don't care. The bond market doesn't care what Powell says. Inflation is here, and interest rates are going up, and bond prices are going down, and we're going to benefit from that. Next is XRT, the retail ETF. 4% is GameStop, which is about as much as my stomach can handle, given that roller coaster. I'm fascinated by the fact that an Amazon alum has come over to join the Chewy founder as this somehow, some way becomes a digital play. It'll be interesting to see. The stock doesn't seem to want to go down, even though the short interest has come down. And as I was mentioning to Mike before, traffic jams are back here in Boston, and the mall parking lots are full, and people are just jonesing to go out and spend money, and they're going to, and they are, and retail is going to benefit. And the softs is probably the weakest part of the portfolio, but I still think it's going to work. I'll talk about it more later. Sugar, soybeans, wheat, corn, those are called the softs, and invested in an ETF through those, and it's going to work, in my view.